This is the Passive 25K podcast, a podcast built around the vision of creating wealth through passive income for ourselves and others. The idea of creating income while you sleep seems like a dream come true, but for most professionals, turning this into a reality is a different story. On this show, you will hear real people breaking passive income streams down to the basics, giving you the next steps to start your own passive income journey. If you're new to the show, my name is Kyle Reedstrom from Fargo, North Dakota, where I get to work with my team of agents and investors each day to complete our goal of $25,000 a month in passive income. Now, let's get right into our next conversation. Welcome to the Passive 25K podcast with Kyle Reedstrom. I am here with our guest, Nick Geraghty, today talking about cryptocurrency as a passive income stream. Nick, we're super excited to have you. I want to read a little bio about you for our audience to give them kind of a lay of the land here. So Nick was born and raised in Fargo, Moorhead. Growing up in Moorhead, he went to NDSU, go Bison. He quickly gravitated towards finance and economics, and in late high school naturally led him into a major of finance. You took a job at a local bank after getting into that interest area. After about 3 years of working at the bank, you landed a position as a mortgage lender, got into the mortgage world. This role helped you grow a network of like-minded friends and colleagues who shared a passion in helping people, especially financially. Thanks to this network, you were able to learn about other financial opportunities, most specifically crypto. Now it's been just under 4 years since diving into the crypto space, and you've been lucky enough to have it now become a main source of passive income for you, allowing you to take on other passions like ultra running and a part-time gig at a local bike shop, fixing and building bikes. Next step for your future is hopefully taking this passion with crypto to build a company that helps others build their own passive income stream as well. Nick, that's the bio, man. That's exciting. Look at the journey. Okay, so Nick, I want to jump right into this. Cryptocurrency as a source of passive income, a passive income stream. I got to know, what's the big deal with this crypto stuff, man? You've been feeding on this longer than most people, and now it's starting to get attention. You're kind of like an OG when it comes to crypto world, you know?
I don't know that I'm one of the OGs that rid through, the first rise and crash of Bitcoin. I was, fortunately or unfortunately, I don't know how to put it. I was after that first wave. Before the recent wave, though, I would say, yeah. But really, everything in crypto revolves around decentralization. That is the hot word. That's what everything in crypto is all about. For me, at least.
Decentralization.
Decentralization.
Okay, decentralization. I've heard DeFi, which is like decentralized
finance. Yep.
Okay. For our audience, I'm really going to stop you on some of these buzzwords. So what is decentralization? What is it compared to what we're used to seeing?
Decentralization is all about putting ownership in the hands of the users. So, a centralized application, that's going to be something like your Twitter, Facebook, your big companies where, let's say you post a tweet on Twitter, right? You've got a centralized group of people, the owners and operators of Twitter, who can sit there and decide, hey, we don't like this tweet. Let's kick Nick off of our platform. There's nothing he can say about it. We're the centralized group of governing body that's going to make the decision on how our application works. And, you can buy stock into it, those kind of things when those companies go public, et cetera. But, centralization is all about one group of people have the power to decide what to do with their application. Gotcha. Decentralization. Yep, go ahead.
Yeah, I mean that makes sense. I mean, that's what we're used to seeing. It's a business structure. It's the government's. There's decision makers that are trying to add value to users. I think it's very much like this traditional capitalistic style of structure, and now enter in decentralization, empowering. It's almost like democracy based business or absolutely. Now finance. So explain to us decentralization and the fire behind this.
That's what gets everybody pumped up in the crypto space, I think, is the democracy of finance, almost, if you will. So like a decentralized application, obviously the opposite of a centralized application is going to be the owners and the users are synonymous. They're good. If you jump into a smart contract, I enter into this contract, I execute it based on how the application is laid out. We can dive into that in a second. Different applications are going to have different uses. Some from savings accounts all the way to casinos, et cetera. We'll get to that in a minute. But once you enter the application and once you're a user in the application, you're an owner equal to the level of investment that you put into that. That investment can be time or it can be currency. Most of these are going to be coins. An application might create their own coin or use another coin like Ethereum. But decentralization is all about divvying up the power of ownership to whoever is on the project itself. So back to the Twitter, analogy. If I'm on there and I'm tweeting 500 times a day and I'm the number one Twitter user, in a decentralized world, I might be one of the top owners of Twitter. But since it's centralized, just because I tweet the most doesn't mean that I have more power in Twitter. And that's going to, probably be more opposite in decentralized world.
Yeah, you could be the best person on Twitter and not gain anything.
Any ownership or any benefit from Twitter itself, correct. And decentralization is all about flipping that. Yeah.
Yeah, okay. I can see the popularity there. Now, when you talk about this, you said there's purpose behind some of the cryptocurrency. Like,
yes,
I think we just think of it as like another form of money. But I want you to dive into that piece of, like, there's actually reasons for certain cryptocurrencies and different coins. And obviously the big one's Bitcoin, which Bitcoin doesn't have a reason necessarily, right?
Right. Yeah. Bitcoin's kind of an anomaly in the crypto world where it's like the gold standard of crypto, if you will. A lot of, the minor tokens kind of follow a little bit of Bitcoin, but, for us crypto purists, I guess, if you can call us that, most of the other tokens are going to have utility behind them. And that's why a lot of us are going to invest in said tokens. It's not because, and when you get your Dogecoins in there, that kind of flips everything on its head, because that is just, it's what we call a meme coin. You're investing in it just in the hopes that somebody else invests in it. But primarily most of the crypto world that a lot of us are investing in are going to be, we're putting our money into projects that we believe are going to shape the future. Let's see, let's come up with some examples. Now I'm putting on the spot, so I'm blanking here. But
and I think I just like the point that you're saying. There's more to some of this stuff. How do people figure out what that is? I mean, real quick on this, if let's say you have a new coin that you've heard of, a crypto, or your friend says, I bought some of this coin. You could insert an example. Give us an example of like a coin and what the purpose is behind it.
Yeah. So, one that comes to mind just off the top of my head is something called Chainlink, we'll say. So Chainlink was one that caught my eye a while ago. Because, and this is going to be the case with kind of everything you're investing in, I'm putting my money in a project that is going to help me with what I'm doing. So a lot of decentralized applications, a few years ago, it used to be, what network is this app going to run on? So let's say I want to create an app, or I want to create a company. And let's say this company is a casino, right? Casinos were very popular a few years ago as one of the earlier dApps that people got into in crypto. I, a few years ago, would have to pick, what network do I want it to be on? Do I want it to be on Ethereum that has its own blockchain? All transactions are recorded on this chain. It needs to be on that network. Otherwise, if I create an action and it's not on the Ethereum blockchain, it's not going to matter because it doesn't build off the previous chains of transactions. Do I want it to be on Tron? Do I want it to be on iOS? I'm just throwing out networks. But what Chainlink did, and Chainlink is a coin that you can buy, is it allows you to layer up different blockchains on the same application. It lets me write a smart contract that I can layer onto different chains or different blockchains. So that's an example of a coin, if you will, that I'm buying because I know Chainlink itself is going to be needed in the crypto space for years to come when people are creating projects that they want to have on different networks.
You had said Chainlink is able to layer on top of other chains instead of just choosing one, right? That's kind of what you were getting to.
Yeah, and I know I'm going to muff it up a little bit because I don't know the exact breakdown. I'm not a computer scientist, so I don't know the nitty-gritty of it, but I know that Chainlink essentially allows me, if I want to build my own application, I can bring in Ethereum, I can bring in Tron, I can bring in Binance, I can bring in these other networks so that, if you, Kyle, you're an Ethereum purist, and if I'm a Binance smart wallet purist, both of us can come to my application and co-mingle, if you will, on the same type of smart contract because of companies like Chainlink that allow us to layer onto something called a smart contract.
Gotcha. Okay. Man.
So knowing that I'm going to need that's why I buy coin in Chainlink, because just like how you might
there's
invest
a solution
in stocks,
there.
it's companies that you believe in. Correct.
Yes, exactly. And that's what I'm hearing is customization, and it's very entrepreneurial. I'm not surprised that this gets wildly popular because it's just as you're diving into the intricacies, there's solutions that pop up. It's not
100% exactly. You're on it.
You're not putting a car wash on the corner of a block that has a bunch of gravel roads.
Right.
You're solving problems within the DeFi cryptocurrency space. Okay, the other thing that I hear here, Nick, is it gets complicated, man. Like it took you a lot of time to become a master at this. And talk to the audience and even me, talk to me about the overwhelm of this. This is kind of overwhelming, man. You're saying terms I'm going to make you define later. How do people grab this?
It's a lot of trial and error, and it's a lot of active listening. Our mutual friend, Jim Renfro, shout out to Jim. There's a lot of hours that, Jim is one of the individuals who actually got me into crypto when I was in a mutual office with him. And a lot of it honestly was, okay, here's an application that we heard about. And to answer your question, where you hear about these things, YouTube University, as with a lot of things that we learn in life, a lot of YouTube watching, finding individuals who, are similar in the way that I think as far as approaching an investment, people who have proved a track record, and then just kind of jumping on their bandwagons as far as what they're investing in, and then getting into a project myself. This will make more sense once we maybe break down an example of a project, but getting into something and then a lot of hours of just active tracking, seeing how something's performing, and honestly just taking swings. I've lost a lot of money just like I've made money. And those are kind of, okay, here's a project that works like this, and put my money into it. Let's see how it performs. Okay, that type of project did not perform. Now I know to avoid those kind of projects. Or that project, came up with a problem. Now here's a company or an application that solves those kind of problems. Let me maybe put my money into that, because if I'm struggling over here on something like this, I know there's going to be other people that are too. So it's just YouTube, chat groups. Telegram has been a godsend for me. I know there's one group on Telegram that I actually pay someone to their Patreon, because just I know that there's a group of people in there that I think very similarly to. And if they bring up, hey, here's a new DApp that I just got into 10 days ago, here's how it's performing. Maybe now I go put some money into that and see how it works for myself. So it's just been a lot of trial and error, a lot of hours invested into seeing how things work, and then building my own strategies from there. So there is really no quick get rich quick scheme in this. You're going to hear a lot of the YouTube channels or a lot of individuals who are like, it's very easy, just create an account here, go put your money there, walk away, and you're a millionaire. It doesn't work like that, just like most things in life.
That's
it's
right,
very
man.
active.
I'm hearing a lot of similar themes. I'm hearing people are going to unlock your knowledge. I'm hearing tracking and trial and error. You said that. You're getting in places with like minds and that's you're climbing on the shoulders of others that have gone before you. Just like anything,
Exactly.
just like real estate investing.
Like anything, yep.
The first time you do it, oftentimes you're watching someone else do it before you do it, type of thing.
Yep.
But
and more often when I get my ego involved and think I'm the smart guy in the room, that's when I lose my money. So
yeah, that's right. Let people pave the way. But I want to know why people need to give this the time of day. Why wouldn't you just, say, oh, I already do my investing. I already do the stock market. I already do real estate investing. I don't need to create cryptocurrency as a passive income stream. But why is it important people jump on this train, Nick? Why? I mean, there's a lot of people in my world that I follow that are real estate investors that are telling me and telling everyone, you need to get on the cryptocurrency train before it leaves the station. Otherwise, you will be left behind and it will be a mistake. And that was the first awakening moment for me, Nick. So why do people need to lean into this complicated stuff and maybe try it on their own?
Yeah, there's a lot of ways to approach answering that question. The first way that I'll approach that is, the age-old advice of not putting all your eggs in one basket. In today's world, everything is changing so rapidly that it's important to not only hold your investment or all of your investments in the US dollar. For most 99.9% of people who are listening to this are going to probably hold US dollar. And a large reason why, A, obviously inflation, and B, it's, in my opinion, naive to think that just because we in our lifetimes have lived on something that's as stable as the US dollar, I don't necessarily know that that's always going to be the case, especially when you look into things like Ukraine and Russia, what's going on over there right now. If you're in a country that's going to war or that is having large economic impacts from things that you can't control yourself, it's immensely important to have money outside of just your US dollar savings accounts. When you're investing in the stock market, CDs, those kind of things, most often the time you are still holding it in the US dollar. So if something happens, inflation goes absolutely crazy, it's important to invest outside of that. And then as far as getting into crypto, as far as passive income goes, to those people who I would say, I have coins, I have Cardano, I have Ethereum, I have all these different coins. I'm good, I'm already diversifying. Well, to them, I would say you are, but you're investing the same way that someone takes $100 in tips from bartending over the weekend and puts it under their mattress. Hey, I have US dollar, right? So I'm good. Well, we would tell all of those people putting money under their mattress, put it somewhere that US dollar is going to gain some interest or it can be put to work, whether it be even just a simple savings account, or if you want to be aggressive and put it in the stock market. Money under your mattress isn't doing you any good, the same way that holding a coin in crypto isn't necessarily doing you as much good as it could.
Yeah, that's good. And that's a whole nother can of worms, putting these coins to work. Now, diversity, I like that advice from the standpoint of diversity. I actually really think there's a ton of meat behind that. That's the risk factor. What's your optimism behind this? What's the reward of where this could go, man? Tell me what you're on fire about with this.
The utility of crypto, how you can interact with someone. Let's say, Kyle, you're over in England right now, and you're launching a project that you want me to help invest in with you. We're going to have to deal with, if I'm sending you money, we're going to have to deal with an application. Am I going to send it to you through Cash App? Am I going to send it to you through my bank by wiring money? Those kind of things.
Wiring. You're right. Very traditional style ways to get money. It's actually hard to access your money in a lot of situations.
It is absolutely. And through blockchain and through decentralization, the exchange of money, exchanging hands is far simpler. It is much quicker. There are much less fees. In fact, you know, a lot of people may not know this, but when you're wiring money out of country, your bank might actually be using crypto to send the money and convert. They might be using something like Ripple. There's a big case with the SEC right now, so I'm not going to dive into that. But banks are they're at the top of the list as far as people jumping into the crypto network. They're just not really letting everybody know about it. Obviously, why would they? Because they can get a bigger grasp of it if they don't. But
that's crazy. I mean, it's quicker and lower. It's instantaneous and low fees is what you're saying. So
banks are doing it already
for them.
And they're going to charge you your $20, $40 wire fee because they always have and because they still can. But it's much simpler for them. So cryptocurrency, what it does is it allows us, the people, to be the bankers. It allows us to take advantage of our own money, to have it in our hands, to use it how we want to use it. And then things like blockchain just make business itself so much easier. Translating it to real estate, because I know that's what you do. I know that's your home base. The biggest utility, in my opinion, going forward for crypto and blockchain is going to be putting titles on blockchain. Have you heard any traction about this?
No, man. Tell me more.
So you're familiar with closing costs, I'm sure, right? The high expense of paying attorneys to do the title work. You know what happens if you lose that? You got to pay for the history of what happened to your title, etc.
Lawyer fees, a bunch of labor. You're right.
Huge expense. Now, imagine, and some states are already doing this. It's not a nationwide thing, although I think that's going to be in the near future. Putting your title of your home onto blockchain. So now that the next transaction, you know, and to go back on what blockchain is, it's just a chain of transactions where every new transaction is built onto the chain of all previous transactions. So if I'm going to doctor the work and say, you know, I owned this home, or it was Nick on the title, etc., I not only have to do that on one transaction, I have to do it on every single transaction that's ever occurred in history. Very hard, if not nearly impossible to do.
It's antiquated, man. You're right. It's just old school thinking. You're introducing ideas here that seem like the future. That's it. That is exciting.
Absolutely.
Stuff,
and to do all of this on blockchain, we're going to need this blockchain technology. And most of the companies that are on this creating these smart contracts already have quote unquote coins, the same way that a lot of companies have stock. You know, not all of these companies will, but investing in these companies that are going to be putting titles onto blockchain. Or, you know, let's say me and 5 of my friends want to buy a house. That's very hard, as you know, to apply for a mortgage with 5 different people, different sources of incomes, all of these things. Well, imagine now if we can take that home and we can tokenize the equity where 5 different people can come in and buy portions of the home. We don't have to pay attorneys any fees because the title history is all on blockchain. It's just a click away. It doesn't take any additional verification, although I'm sure there'll still be those steps in some form. But when we can digitalize everything, we can spread out ownership, spread out equity. It's just going to completely change the future. So the earlier you can get yourself familiar with how that world works, you know, getting your hands in different pots, familiarizing yourself with different projects, the easier it's going to be for you to learn as it goes. Because I can tell you, I've been in it for almost 4 years, and it's still a lot for me to grasp when different projects come out. So the earlier you get in, the shorter that learning curve is going to be for you.
Man, I really like how you put that, Nick. That is, it's actually, and that's just one little bit, man, what you just touched on. And I think that's kind of mind blowing. And I definitely want to look into that more. I want to take a little break. And when we come back, I'm going to go straight game show host on you. And like, I've been writing down words you've been saying, and I want you to take us through cryptocurrency 101 on different words that we're hearing in articles and things, and even things you've said, and just defining.
And I'll do my best. Yeah.
Yes, do your best. And we're going to take a quick break, and we'll be right back with a little cryptocurrency 101. You're not going to want to miss it. Hey, wanted to take a quick break from this week's episode. Wondering if you ever ask yourself, how do I get started in this stuff? Or if I'm already doing it, what are some next steps or people that are doing the same thing that I want to do, people on this passive income journey? Well, we were getting that question, and we created a community of passive income investors called Passive Income University. This is a place where you can watch videos, things that we've done, where we put tools and information, where we've built a community of people that can communicate, ask questions, and grow together to start their passive income journey. And eventually we complete our passive income journey together. If you're interested in more info on Passive Income University, check us out at p25kg.com. Okay, we are back with Nick Geraghty talking about cryptocurrency as a passive income stream. Nick's already dove into some really unique topics in terms of utility of this blockchain technology for the future. Really great stuff so far, Nick, but we want to reel it back in, and I want to go cryptocurrency 101. So I'm gonna throw terms at you, and I want you to define them, because I don't even know I don't even know these. So I'm excited.
We'll
so let's
see.
start
Hopefully
with
I do. Well, hopefully you're not putting me too much on the spot here. We'll see.
Yeah, do your best, man. If you have to Google or something, do your thing. Okay, blockchain. We've heard it. We've heard blockchain technology. What's blockchain? That seems like a fundamental term with this stuff.
Yeah, blockchain is it's basically just a ledger, and it's a digital ledger that builds itself on previous versions of itself. So here, and I'm just going to look up the Google definition just to give you an idea of how the computer says it.
Nick.
I am cheating a little bit, but I'll dive into what it's talking about here. So yeah, distributed database that's shared among nodes of a computer network. So what that means is it's built on a network, and when they say node, they're just essentially meaning a computer, and it's an updated ledger that everybody has access to at all times. So I'm not going to spend too much time on this, but I always refer to a parable that refers to these four captains that are attacking a castle in the middle of these mountains. Each of these captains is approaching one from the north, south, east, and west, and they can only see the captain to their left and right, not the one across from them. They all have to decide, are we going to attack the castle or not? Do we have enough reinforcements? They can only hold a flag, a green flag or a red flag. Well, as myself, I can only see one or two captains, not all three. So if the left and the right guy are saying yes, but the guy across from me is saying no, and we don't all have a unanimous decision, we may not all attack, or some may retreat. We may not have enough people to take the castle over. A blockchain is essentially, and again, I know I did probably a poor job of talking about that parable, but what a blockchain does is it puts a tablet in the hands of each of these captains. So I can click my decision, and each other three captains can see my decision live time, knowing are we green or are we red? We're not relying on, I'm taking word from the captain to my left that the captain across from me said that. That's how banking works. It works the way that the captains are approaching this castle. When I have a ledger at my bank and I'm transferring money to a bank in London, I'm updating my ledger, then I'm updating an intermediary bank's ledger, and then they're taking that ledger and going to the bank in London and updating theirs. Well, why not have a tablet in front of you that has a live version of what my decision is? And that's what blockchain does, is it just makes everything, by making a transaction built off of every other transaction, you're not relying on the word of someone. You're taking everything at face value as it is right in front of you. I know it's kind of a hard way to describe it. There's a lot of people that probably describe it better than I, but that's the best way I can do it. Blockchain's it's a ledger that's updated live time, built off of every other transaction.
That's good, man. I love the story aspect too. Okay, we're diving in. What's an altcoin?
Alternative coin. So an altcoin is going to be something basically other than Bitcoin. Ethereum's getting to the point where it's one of the main coins, but it would still technically be called an altcoin. An altcoin is just all these other crypto coins that exist outside of your main coin, Bitcoin. So
because
when
Bitcoin is its own blockchain, right?
Yep, and most of these coins are going to be their own chains. Some are sub tokens, so some are coins based on another chain, another coin. But yeah, Bitcoin is its own Bitcoin, to answer your question. Yes.
And Ethereum's its own chain. A lot of these have their own chains. Okay, that makes sense. And alt is just kind of things other than Bitcoin. I didn't prep you that we'd get into this, but we hear a lot about NFTs lately.
Non-fungible token.
Yeah. What's an NFT?
The best way I can think to describe it is it's a digital title. So, you're taking the title to something and you're putting it on a network. So, if I hold that token, then I hold the title to said asset. It just makes protection of ownership easier. You can create ownership in a lot of things that otherwise you couldn't necessarily create. NFTs right now, they're very popular in the aspect as far as art goes. You're seeing a lot of people that create their profile pics with their new NFT. Art is a good way, is a good example for the NFT network because all art is unique. There's only one version of said painting. So if I can create the title for it, and then I can sell that title for it, like when you're creating a project on Adobe and you have to pay for the rights to said artwork or just certain things, creating NFTs or creating titles to these assets just makes that process much simpler. And in my opinion, the NFT space is going to explode, way outside of artwork. Those examples, that's a rabbit hole, no doubt. And I don't necessarily know myself enough about different NFT projects to dive too far down that hole. But yeah, non-fungible token, it just means it's, in my opinion, creating a title to a digital asset. And whether we go outside of just digital assets, that's another conversation. But
okay, that's good though. That gives us some basis behind some of these things we're hearing. Okay, you had said the word smart contract in reference to some of these different projects and things. Explain a smart contract to us.
Yeah, best example I have for a smart contract would be something like a savings account. So this was one of my earlier DApp, and when I say DApp, that's maybe one of your other hot words, decentralized.
Yeah, that
apps.
is. DApp is another one. So decentralized app is a DApp. And then you're going to talk about how smart contracts and dApps interact.
Yep. Smart contracts work within dApps. Yep. So a DApp is just an app. Twitter is an app. It's a centralized app, so I could call it a SAP, I guess.
There you go. That's how they should call it. Yes.
Right. So a smart contract. I'm going to use the example of a savings account. So let's say I have a smart contract. The way that this contract is written is that if I deposit into said savings account, 10% will be taken off the top. If I withdraw my money from the savings account, 10% will be taken from that withdrawal. Where these penalties are going to go is to anybody else who already has money deposited into the savings account. So what that smart contract does is it just sets up the rules for how this savings account is going to exist. Now, knowing that I have a smart contract in front of me written like this, that's where we as the user have to decide, is this a good app? Is this a good investment or not? And a lot of that comes from past performance and honestly gut. It's the wild, wild west right now in the crypto space with some of these smart contracts. This particular example, I have gotten into a few of these, how these work, and where your money comes from, whether or not it's going to be a good hit or not, is knowing, okay, the fundamentals, how this works. If 10% is taken off the top, 10% is taken off the back, and I'm only going to make money by people depositing or withdrawing and their 10% getting hit. What's my strategy? Best strategy there would maybe be, get in early. If I'm the first person on there, then everybody else who comes and deposits and withdraws money, I'm getting income based off of that.
Yeah.
And then, sorry, I missed this part. How much income you get is based on your percentage of ownership. And your percentage of ownership is directly tied to, if I have $100 deposited, all of the dollars invested in the savings account are 1,000, I have 10% ownership in the savings account, or I own 10% of this bank, if you will.
Gotcha.
Now,
So your ownership,
Kyle comes in,
it's redistributed based on your ownership.
Exactly. And what a smart contract does, not to get again too far into these weeds, but what a smart contract does is it lays the rules out for how this app or how this is going to exist.
Okay.
Yep. And then we as the users just follow those rules. Those rules can't be changed. They're written into the blockchain. And as we come in, we're executing based on how those rules have been laid out in front of us. And that's the beauty of how this works, is, we're not necessarily relying on some centralized group to change the rules on us and then, make this no longer profitable for us. It's written in stone, if you will.
Yeah, it's done. The smart contract exists. Now, somebody had to create that at the beginning. And then once it's created, it's done. Then it's up to the users after that, right? That's how that that's how that comes into inception.
And that can also change a little bit. So when you're creating this smart contract or creating this application, typically you're going to put together something called a white paper. Yep. And that's, that exists outside of crypto as well. It's just this is how this platform is going to work. And typically in these smart contracts, 5%, 2%, whatever percentage of it is going to be distributed to the creator. And I should say sometimes these smart contracts can be malleable, but most of the time, if they are malleable, they're only going to be changed based on votes. And those votes are, if I put way more money into this savings account than the developer even put in, or their ownership, I could be a whale in this case, and I'm adding another hot word. I could be, my vote could have more sway over the creator even if I own enough. So it democratizes everything. And smart contracts.
I've heard that to distribute ownership, don't overly distribute ownership, but it's kind of based on the users get to decide some
Absolutely.
of that to a certain extent. But
Yep.
No, that's good. And these are deep topics in vocabulary in the crypto space. So I'm challenging you here. Explain to us the final one here. Staking is something we've heard. What's staking about, or people that are using crypto and staking crypto?
Yeah, so staking can be broken down a few different ways. But staking, to make it simple, I would say, is you're giving up some of what you have. So let's say in the crypto space, obviously staking coins is going to be, if I have 1,000 Cardano and now I stake Cardano, most of the time you're going to be doing it on like a trading platform. So you're probably familiar with, most people are familiar with Coinbase. There's a lot of other trading platforms out there where in order for trades to exist, there needs to be liquidity. Liquidity exists by people staking their coins. There are different types of staking. I'm not going to go too far down this road. There's your proof of work, that's mining coins. There's your proof of stake, that's more so kind of what I'm describing. This goes back to the case of if I have $100 sitting under my mattress, why not go put it in a bank account, right?
Yeah.
That's, I guess, the best way I could describe staking is you're taking your money out of from under your mattress and you're going and depositing it somewhere. So you're letting that money go to work. So
yes, yeah.
Staking can be done, again, like I said, a number of different ways, but the simplest way to look at it is the liquidity staking. So if I have, again, 1,000 Cardano and there's a new exchange, well, this exchange isn't going to necessarily be able to exist unless that exchange itself has millions of Cardano. Because if I want to come and swap US dollar for Cardano, I can only do that if Cardano is already on the platform. And that platform is going to reward the people who give up their coins.
And stake their coins.
Exactly.
And they're going to give them return. And I've even heard of some returns for staking 50%. I've even seen over 100% APR returns for staking certain coins that are maybe less popular, more rare, right? Like that's crazy to think someone would just double you up, and it's fast returns too.
your reward, and in that case too, there absolutely is a lot of those avenues that offer crazy returns on that. But I would say your reward in those cases is often equal to your risk. So when you're seeing crazy high rewards, it might be because there's low traffic. And in that case, you might see a fluctuation in price. You might see 100% return in staking, but your coin could tank 50%, in which case you're back to square one.
That's good to know. So you have to track your price like crazy on that too. So
So
don't get money in one hand and then lose it in the other hand,
Exactly. Yep. And staking can even be something like giving up, quote unquote equity. So let's say, you have those sub tokens, those tokens you can't necessarily buy on the market, but tokens you can only get by involving yourself in a project. Well, if you give those tokens back up, you're essentially adding more stability to the price of that token, which those platforms like, and they're going to reward you by giving you, a percentage of that company's income, if you will. Again, another rabbit hole, but another way that you can quote unquote stake. So there's not one size fits all on this staking conversation. It's essentially just giving one of your assets up in the short term, hoping that, someone else taking control of that asset will make money and give you a cut of it.
Yeah. Hey, man, you passed the test on the crypto vocabulary quiz here. So thank you so much for that and diving into those, man. Really, really well done. I want to use this opportunity to talk about crypto as a passive income stream for you. You've created some financial freedom around this topic. You've systemized your way of doing things. And like you said, you've adopted certain things you've learned and you've created the Nick Geraghty way. But man, you're making income doing this. You're creating lifestyle doing this, and hopefully it's the beginning of much more. I mean, you're building something here. So if you would share as much as you're willing to, even for numbers or examples of projects you've done, but how are you doing it and how have you created it for you, Nick?
Yeah, a lot of the early history of my creation of passive income was it's passive now, but was very active going in. So, not necessarily the way that I advise everybody to do it, but my personal history it honestly started just because I'm a nerd and because I'm obsessed with things like Microsoft Excel and tracking things. It's my Xbox. So I would get into different projects just for the fun of it. There are even, decentralized app games. So you can play a game, and the more you play the game, the more you're rewarded with a token. You hold that token, and anybody else who comes to the game after you, if they invest in it, you get a percentage of income off of it. So that's how my journey started, was just getting into these different decentralized app platforms. So one of them, probably one of my biggest hits it's called Bet Fury, and it came out a couple of years ago. And what it is it's honestly, it's a casino. So, but how the casino works is the more you participate in the casino. So this is why I give this advice with the quotations around it, because it's not necessarily something I always advise everybody get into. But if you're betting a hand, and that casino rewards you with, hey, every $10 you bet, we give you a token. Well, if you keep betting 10, 10, 10, 10, 10, you stack up all your tokens. I would obsess over what are the ways I can minimize my risk at this casino, betting the most hands possible with the amount of money I have coming in, and then just kind of coming up with different ideas, formulas, tracking it on Microsoft Excel, what's proven to give me the most coins per dollar I invest. And then a lot of it, honestly, I was on there day one, the very first day that this app came out. So I had a unique opportunity of there's going to be a lot of people behind me. So, and I'll throw out some numbers here for you. I put about 10,000 in within the first 2 or 3 weeks. It took a while to get all of these dollars invested. I wasn't putting all 10,000, put it on black and roulette, right? Roll that wheel,
you're working
baby.
it in. Yeah.
I was making, $2 bets where if I won, I got 6 cents, like $2.06 back, but I had a 95% chance to win. So when I lost $2, But when I won, I didn't win much either. But what that did is it allowed me to put my computer on auto bet, where it just rolled and rolled and rolled and rolled all night till probably 4 a.m. And then my computer would shut down because it would get too hot. And I would start the next night after work. I would work my 8-hour shift, go to the gym, come home, set my auto betting back up, and then just watch them roll. So there's examples of that. And then, different games, different types of things. And then just kind of chatting with friends, going back to throw a shout out to Jim Renfro. A lot of ideas he and I passed between each other. Hey, you hear about this stat that came out? And I guess going back to the numbers on the casino thing, the 10 I put in eventually got to enough where I had enough ownership in this casino. The casino was bringing in, it was distributing, and I could get it out in front of me. It was distributing about 500,000 to 600,000 a day, every day, because that's what the casino had won from people gambling on it. And my ownership in that casino for 2021 was probably a steady. It wasn't steady. It went up and down a bit, but I would say on average anywhere from 5,000 to 6,000 a month. So that's where I was able to finally step away from my mortgage job. This was one of the bigger ones that hit, where that replaced my income. 5,000 to 6,000 a month. I didn't need to go back to this casino anymore. I had done it enough the first month or two that now I had enough ownership. That ownership saturates over time because more and more people are coming after me. But I had enough ownership, and there was enough attention on this said casino because it was one of the first casinos you could bet Ethereum, Tron, and Bitcoin in. And that was a big one for us that were on it a while ago. Bitcoin was a tougher thing to use in these decentralized apps. There was enough people after me that I get to sit back, and every night at 7 p.m. I'll still get a dividend distribution to my wallet that I can take out, cash out in the US dollar if I want. Or what I've mostly done with that income now is put it into different apps, experiment with different platforms that I can put some money into. So a lot of it, my personal journey has just been nerding out. As I've gone through time, these opportunities, they're harder and harder to find just because there's more applications out there. It's harder to find the good ones. But I've gotten more into savings account or safer options like staking on bigger platforms. So right now I'm more after the I'd say 8 to 14% returns. And those can be pretty easy. Once you have the coins, that's obviously the biggest thing. It takes money to get money. But once you have the coins, I've gone to places like Nexo. Nexo is a great savings account option, or you can lend based on your own money. They'll lend you more crypto that you, and you're essentially staking what crypto you have with them. But anybody can get US dollar coin, put it on Nexo and get something crazy like 10 to 12%. You're not going to get that anywhere on any savings account. You don't need to know anything.
That's just there. Yeah, that's a really cool. That's a really cool, thing. I don't think people know that, Nick.
Exactly, and that's more so what I'm spending my time on now, because the more familiar I get with it, the more I'm coming back to basics. What's safe? As Warren Buffett says, the best thing you can do is minimize risk at every turn. So I took that risk early on, mostly because I was just passionate about how this stuff worked. I didn't necessarily go into it thinking I'm going to get rich. I got into it because it was something to keep me busy. I had fun with it. I got passionate about it. And the more passionate I got about it, the more now I want to build something that I can bring people in. I can teach people. I can show people, hey, this isn't necessarily rocket science. Some of that stuff I did earlier on, that's complicated, no doubt. But the stuff that I'm doing now, or stuff that is out there, just a savings account. Everybody knows how a savings account works, or CDs. There are projects like this project called Hex, where it works like a CD. You buy the CD, if you will, and they reward. So if I put 10 Hex into a 12-month CD, I get paid X amount of Hex at the end of it. Well, if I'm going to own this coin anyway, why not put it into something like a CD where I can have 1.5 Hex per Hex I invest at end of said period. And now I have more of the coin because I was planning on holding it anyway. And it can be locked up into a smart contract, if you will. So yeah, there's a lot of these other simple ways too.
I appreciate you opening up a little bit about that. That gives us an example of what, and this is just one variety, which is the crazy part, but this just gives life to what an example of success is in cryptocurrency. And then, the work was done up front. Like you said, you got things rolling, and it took some muscle, like any really good investment or business, that it becomes passive over time. And now it's just paying you, man. It's creating a lifestyle for you. And that's what we're all about at, the Passive 25K podcast is talking about how do we create these revenue streams that can turn passive, even if they're active up front, to create lifestyle for ourselves.
For sure.
So, man, I want to leave people with this. What's a simple advice for people to get started safely on something like this? Man, if people are sitting here listening, they're like, I want to try this out. What's something quick that you could tell them to try, or some advice?
I'll pass on the advice that I got when I started getting into crypto. Start with money that if it disappeared and you no longer had any access to it, or it hit zero, it's not going to be life-changing. It's not going to be detrimental to you. It might suck. Obviously, losing money in any regard does suck, but start an investment with an amount that it can hit zero and it's not going to be detrimental to your life or lifestyle. And then once you have done that, that's going to be the best way to learn the mechanics of how it works. Just transferring wallets, something that seems very simple, transferring money from one account to another. If you don't do it the right way, you do it on a wrong network, it can disappear. Those things can happen. So starting with an amount, a nice low amount, just to familiarize yourself with the space, and finding an exchange that you're comfortable with. Very popular one, obviously, is Coinbase. I use something called KuCoin. Finding an exchange you're comfortable on, an exchange that offers whatever coins you're looking to invest in, and with an amount that you're comfortable losing, is the best way to start.
That's great advice, man. And I can speak from experience. Nick has been somebody that's broken down some of these things for me in giving me advice, in the sense of getting your hands a little dirty in this helps you to just understand what you're dealing with, understand the world. Even if you're just playing around with it, a couple of little key moves here, transfers here and there, can really start to turn the light bulbs on in the cryptocurrency space and let the fog dissipate from something that obviously Nick thinks is the future and has a massive upside. So
something as simple as, get Bitcoin on Cash App, get an account on an exchange like Coinbase, and learn the mechanics of sending Bitcoin from Cash App to Coinbase, or and trading it to US dollar and sending it back. Just simple things like that are going to make your life so much easier going into the future if you're trying to get into
start to understand it. Yeah, exactly. And that's going to be the door open on some of these things, a new possible passive income revenue stream. Okay, Nick, this has been a wealth of knowledge, man. I'm so impressed by how articulate you are and the passion you have behind this, and how you track things, how you do this. How do people find you, Nick?
Yeah, you can just follow me on the old social media and just send me a message that way. I've had people reach out to me that way. My tag is Nicholas, that's with the K, NICKOLAS_Donald. Or you can, send me an email the old-fashioned way, I guess not a fax, but an email at nick042392@gmail. Again, that was nick042392@gmail. So yeah, just follow me, message me on Instagram, or just send me an email with some questions that you have, or questions, comments, concerns, and hopefully I can help you out.
That's awesome. And we will put all Nick's information in the show notes for the audience if you want to check out or reach out to Nick for more information, interact with him. And a quick note, Passive Income University has now created a crypto Discord. We are in the game in the sense of creating some of the community Nick talked about, because we want a place where people can come and start to ask these questions, foster discussion. And we want to bring in people like Nick that are experts to engage and give us step-by-steps and launch us into this world of crypto. So
it's all about Nick, the people in the community you can build, as you know. So
That is 100%, man. And you're one of those people we really trust with this. So thank you for sharing everything. It's been a pleasure talking with you, man. Enjoyed having you on.
Love it. Thanks, Kyle.
This has been the Passive 25K podcast. If you enjoyed today's episode, be sure to subscribe so you don't miss future conversations. Also, tell us what you thought by leaving a comment below on today's topic. If something really hit with you, don't be afraid to share this with someone else that's interested in passive income. Thanks again for tuning in. I'll catch you next time for another episode of the Passive 25K podcast.